Some major news this week. Jerome Powell and the Federal Reserve officially are reducing the Fed funds rate by 0.5%. This is major news because this is the first time in over 4 years that we've seen a rate cut from the Federal Reserve since pre-COVID. A lot has changed. The market's gone crazy. The market's been all over the place. Inflation has been rising like crazy. Home values have continued to rise. The quantity of homes for sale has dropped dramatically. So what I want to do here, this is kind of a breaking news. This is a little bit of a different video that I normally make because I want to get you the information. I want to tell you how this is going to impact you and if you're looking to buy specifically in San Diego County. What's this going to do to our housing market over the next couple of months? Is it going to bring a ton of buyers to the market? Is it going to bring rates down? Is it going to make things more affordable? I think you might be a little bit surprised at my answer. But if you don't know me, my name is Dan Parker with the Best Life Home Team, your San Diego real estate resource. I have a small team here in San Diego. We specialize in helping people relocate to San Diego County. We work all across the county. So if you are in need of that assistance, if you're looking to buy a home, sell a home in this county, we'd love to help. Our contact info is down below. So let's get right to this. First, I want you to know what this actually means when the Fed rate is reduced, when that rate is cut, because here's a really interesting example of what's going on. This is mortgage rates over the last 12 months. What you can see here is they peaked out just over 8% last October, and today they're down to 6%. Essentially, during this entire time, Fed funds rate has stayed flat, has stayed the same. So it's really important to know, first off, that the Fed funds rate is not directly correlated to mortgage rates. Mortgage rates are more so looking at, it's more correlated to the 10-year bonds, which are going to be looking ahead at the economy and what's going to happen. They're looking ahead at where they anticipate the Fed funds rate is going to be in the next 6 or so months. So just because we had a lowered Fed funds rate of 0.5 point, we actually did not see mortgage rates drop overnight. But here's the interesting thing, and here's what I want you to know. If you are a buyer out there or you're considering buying a house, this is showing people what is to come. We're just above 6% mortgage rates right now, and I believe before the end of the year, it's very likely we're going to be under 6%. We're going to be in the 5s, which we've all been waiting for a long time. So trying to figure out how this is going to impact buyers, how this is going to impact sellers is not just what's happening today with mortgage rates. It's where are rates going? Where is the confidence level of people in this market, whether they're looking to just simply sell their house and then buy a house, or if they're only looking to purchase a house. And both of those have different implications. So as far as my experience, what's happening right now, I'm having a lot of conversations with both buyers and sellers, having a lot more buyers anticipating buying early 2025. We're having a lot of sellers that are considering selling either at the end of this year or the beginning of next year. So what I anticipate, and what I've been saying for a little while, is we've been in a market where, let me show you my next slide here. We've been in a market where the active listing inventory, this is one of the biggest things to consider in this market. We've had so few homes sold, and even though home values have risen, the amount of supply has been really muted. What you can see here, this is over the last 12 years, so there's a long period of time. This is what a lot of local experts would consider from like 2012 to 2020 is more or less a neutral market in San Diego. I mean, it was really a seller's market, but it's what we've gotten used to as more of a neutral market where we have 7,000, 6,000, 7,000, 8,000 homes for sale across the county. What we've seen since 2020 has been very muted supply, and we're starting to see that go up, which is a good thing. It's especially a good thing if you want to buy a house because that means there's going to be more options. And so when we're looking at considering buying a home here, this is really good news because between affordability and supply increasing, which we haven't seen in a while, you're going to have more options and you're going to have more affordability, which is a good thing. The downside is we are going through an election cycle, so that is muting demand a little bit. We're going through a normal cycle of wintertime where both supply and demand tend to drop a little bit. And then once we hit next year, things are going to ramp up pretty quick. That's what I believe is going to happen. That's what a lot of experts believe are going to happen. And so if you were potentially considering buying or selling, the main question is, should you do it now or should you wait? And I'm not the type of person that's going to sit here and say, Yes, you need to, or no, you don't need to. But what I try to do is put myself in that situation. If I didn't own a house that I didn't have to sell and I were considering buying, then I would absolutely today be open to the option of buying. I would keep my options open. I would take my time. I would see if I could get maybe a potential of a little bit of deal, because we're going into the time of year where there are more options, and there are some sellers out there that start to get a little bit desperate. And so I would look to try and find some of those sellers. If I had to sell my house and then buy a house contingent on that sale, and my house were really unique, we're very well upgraded. Every year I put the 1% to 2% back into the house on repairs and upgrades that are necessary to keep it at a really high, very desirable level, I would have no problem selling right now. However, if you're in the situation where you've been living in the same house for a while, you've let it needs a little bit of TLC. You haven't painted the walls in a while. There are a couple things that need to be done probably. If you're in that type of scenario and your home is very common, not very unique, but in a nice neighborhood, I would maybe question whether it would make more sense to wait until the market picks up a little bit, to wait until there is more competition, because all of those little things are going to be a bigger deal to buyers when they have more options like in this market. Now, the good news is when we're looking ahead at next year's market, the options that are going to be available are really, really beneficial for everybody. So if you want to know what this means for you and your potential plans moving forward, let me know. Reach out. Myself, my team, we would love to help. Thank you so much for watching this video. We'll see you on the next one.